Man, what a week, man. I I gotta be honest. This is the most brutal week for me, dude. Like, my kids are home for the week. Obviously, I have a full-time job. The market's down. Dude, this week is brutal. Like, how's it going for you?
Great. I had a meeting today where I used to be in a management position at another hospital that I used to work at. And basically they're having an issue. And they brought me on as almost like a consultant kind of thing. And I was very brutally honest with them. And I said, look, your problem is not that you don't have people. You clearly have people. You just can't get them to do what you need them to do. So they don't have the willpower to do it. Every time you ask them to do X, Y, and Z, they always go back to management and say, "Oh, it's not my job," blah blah blah. And I said, it's in their job description, but no one wants to hold them accountable for it. And I think over the last like 4 years, because of COVID, we've got into this mindset sometimes that the employees are basically like you can't get rid of them, like otherwise you won't find a replacement. I think you're going to be able to find some replacements soon. That's where we are in all of this. So I very distinctly said to their nursing leadership and to their management staff, I said, look, just having a warm body does not mean that you're going to affect any change. And no matter what process I tell you that I use to get the job done, you are looking for an answer that I can't give you, which is there's a magic solution where you just press a button and then everything goes away. And that's not it. Like sometimes being in management means you have to make some hard decisions. And that means that you have to remind the staff that it's their job to do certain things and it's your job to manage them. So, and that was it. And some people didn't like it and they said, "Oh, we need to take this offline. I think this is a little bit too much for us." And I said, "Listen, by all means take it offline, but this is a standard industry practice. If you don't want to follow with it, that's fine. If you think you can create a new process that ignores industry-wide standards and you think that's going to work, go for it. Go ahead, do it." And I know Zoe is in here, so Zoe knows from nursing, when you go to radiology, how many motherfuckers are doing nothing? So just Zoe will tell you, you go to radiology, dudes are just like chilling. So
Yeah.
a lot of times people are like, what the hell do y'all even do anymore? So sometimes it takes like a logical person to remind them, like, hey, people will work at the lowest level of their scope until you force them to work higher, right? That's how it is. The more you kind of push, you're gonna get pushback, but eventually people will get with the program and eventually they'll work at the higher end of their scope. So I think that's what it is. It's just over the last 4 years, I think we've been, especially post COVID, been very, very relaxed at the hospital, not just the hospital system, but medical care in general. And it's always been like, oh, these guys are the heroes. And I'm like, yeah, they are heroes, but that doesn't mean that they get to chill. They got to go do some shit. So
Yeah. No, I hear you. I mean,
Yeah.
I've had my fair share of people, and it's actually pretty interesting because you would think that, like, when I started out entry level, I started on help desk, and even before that, I worked in retail and like Target and Best Buy and stuff. To be honest, when I worked at Target and Best Buy and stuff, like I used to work at Geek Squad. I used to work at Geek Squad, right? But the people at Geek Squad, like, they were on it, man. Like it was actually a pretty good team that we had. Target, I used to work in the cashier, and like there'd be just people who like just don't really care, but like not in the store I was on. But like when I was in entry level help desk, like, dude, there are some folks over there that like just don't care. And it's like, how is this person still working here? Like they literally do not even look at the ticket queue. They don't really care if someone's getting upset in the ticket, whatever, getting escalated, whatever. And I'm always picking up their slack whenever. And then like here I am, like maybe when I started working in IT, like 15 years down the road. And it's like, I still see it today, dude. So I don't know. I mean, I don't think it really matters which level you are on the corp ladder. I think people like that just exist in general. It's not even just in work; it's in life too. There are many. You ever been to a restaurant and you're just like looking around, like the server's not attending to you? There's plates everywhere. They're not even that busy, so it doesn't make any sense. The food is bad, whatever. It's like, how is this place still around, right?
Yeah.
Even people who own businesses are like that. And even further, even millionaires who've probably been spoon-fed their whole life, and then they're just lazy as hell, and they're still getting by because they just grew up like that and they were raised like that, right? Or they were raised with the spoon being fed to them their entire life, and they just have some people working for them that just like, people are not going to say anything, right? Like, people appear like that. People exist like that no matter where you go. And the only way to tell them to do their job is to tell them, do your job. Sometimes it's just like the hard way of the what's it called? Like you gotta not be rough, but like you gotta be brutally honest. Sometimes being brutally honest is the way to go.
Half the job of basically consulting is just telling them the truth that they don't want to hear. And the best meme that I can think about it is like something like this. Check this out. So it's like, if you have 7 chairs and 10 children, what do you do? So usually, like, if there's a funny joke, like KPMG or one of the other guys will tell you, get 3 more chairs. McKinsey, who is another consulting firm, is like, kill 3 kids. That's usually McKinsey's MO.
There goes monetization.
Why? Because of Star Wars?
No, never mind. No. Don't worry about it. It's fine.
Yeah.
Let's not put down the word kill and then kids in the same sentence. I prefer not to do that. Anyways,
but that's usually how usually like consulting management like works, right? So whenever they get called in, you've got 2 schools of thought. One is, oh, you need to expand the business. The other school of thought is you just need to shrink your expenses, So right now, if you think about it, we're living through the McKinsey dream, which is get rid of everyone. So right now, if McKinsey was hired by the government, which is Elon just like cut them all, So
let's see here. Someone says something here.
Let's see.
This is a long one, but I feel like I put it on here just to read it out. For sure, some people slack off. I've experienced that also. However, at least in my hospital, coworkers are brutal, risking their life. He was me personally believe the hospital to money, pass along to employees, and even. Yeah, I mean, that and teachers. Teachers are the most underpaid jobs in America. And considering that these are the teachers, obviously, you go to private school, different story, but public school teachers are teaching the majority of kids in the entire country who's going to be running this country when they grow up. It is the most ridiculous budget cuts I've ever seen across the board when it comes to teaching.
I'm going to push back a little bit and say that I think no matter how much you pay a teacher, if you don't give them the tools of success, they're going to fail. And what do I mean by that? I mean, like, you can pay a teacher $500,000, but if they have a class size of 40, does it really matter if you pay them more?
I'm not talking about, when I say, you know what? You're right. I understand your pushback.
So my thinking is hire more teachers, right? Have more instructors so that this way the class sizes are manageable. So that this way the teachers are not spending 2/3 of so it'd be like 1/3 of the time they're in school, but 2/3 of the time they're spending on grading papers and doing all this additional extra shit, right? Because they just have so much volume of kids that they have to manage. And then what happens is you have the gifted people, and then you have the slackers, and then you spend so much time getting the slackers to the higher level that you ignore the ones that are there. So my thinking is, it's always better to have smaller classes with more focus on competence, and then upgrading those kids. So the kids that need the most help, put them at the bottom, or a class that specifically has more teachers that can work with them one-on-one. Whereas the students that are at the top of their game, they only need maybe like one teacher or 1.5 teacher with some assistants or something. So it's almost like, let's pay the teachers more, but instead of just paying them more, let's kind of put a situation where we're hiring more teachers rather than having them it's same thing with nursing. And once again, Zoe can tell you, in nursing, they'll be like, oh, here's more money, here's overtime, but they'll give you like 20 patients to manage. And let me tell you, if you ask Zoe, if you ask any nurse, would you rather have more pay and more patients, or would you rather have a little bit less pay and a lot less patients? Every single time, every nurse will be like, I want less patients, because literally the most stressful thing, and I've spoken to nurses about this, the most stressful thing you could do is put someone in a position where they cannot manage their day-to-day, no matter how much you pay them. If you don't give them the adequate staffing support, the number of support, the pay means absolute bogus, you know. Sorry, go ahead.
Yeah, no, I agree with you. In fact, that is what I was kind of referring to before.
Yeah.
In terms of public classrooms, especially, they're running in LAUSD and even in New York as well. I don't want to talk about this too much because this is a financial podcast, but this is actually an interesting topic because this is technically finance as well, especially when it comes to budget cuts. You know, with the Doge and everything. I really hope they don't cut those budgets when it comes to public school systems. In fact, I think it's going to be the complete opposite. But either way, when it comes to teachers' pay, like they get paid the same statewide, you know, and it's based on tenure, so it really doesn't matter. And I think that you'd have to increase the budget a lot in order to increase that amount. But yeah, if you were to ask any teacher today, would you rather get a raise or would you rather get less students in your classroom? Oh, they're going to go for less students in the classroom. Totally understandable. I mean, that's the reason I had a lot of teachers, especially in LA, to send their kids to private school. And I sent my kids to private school because of the fact that I know that these classrooms in the public schools are very packed. So, you know, we'll see. We'll see how it turns out. But I definitely do think that even on this scale as well, teachers are still underpaid. But yeah. I don't expect teachers to get paid six figures. I don't think that would be an efficient way of allocating those funds. It would like if you're going to double a teacher's salary, it's better to get two teachers instead of just one, because in that way, it's easier for them to live their lives and not grade homeworks and create curriculum plans and whatever that might be every single night. And then like teachers, they work like 80-hour weeks. I don't know if people understand that. Teacher, like, I don't know if I ever told you this. I was a teacher for 1 year and then I hated it and I stopped doing it. But it was like 80 hours a week, dude. And I got to be honest, I worked that much when I was in IT, but obviously my heart was somewhere else. But like, I don't think anyone's sitting there grading homeworks and doing classroom management is like, oh, I love this right now. I love this so much. It's like, dude, when you mention the bad kids in the classroom, when I say bad, I mean behavior wise, not grades wise, because it's a very different story. Because kids could have bad grades, but still be very good kids because they're really trying, right? So that one's a little bit different. But when you have kids who are disrupting the classroom, they are taking away potential learning time for the ones who actually do want to be there. And you're spending half the time managing those kids, especially when you have a crowded classroom, because you can't. Okay, it's a lot easier for kids to be bad kids in a classroom or misbehave when there are 40 kids in the classroom versus having only 20 kids. If you have 20 kids in the classroom, people would be like, oh, I feel a little singled out. I'm not going to be like such a bad kid. Right? It's very easy to single that person out. But if it's like 5 bad kids in a classroom of 40, that's very hard to manage. And then what about the kids in the back who maybe they have B's or maybe even the kids who have good grades and stuff? They want to be there to learn and they can't learn because there's so many kids in their classroom. So
I think the reason why we bring this up is that right now is a good time to bring this up, actually, because this debate is happening at the governmental levels, right? With Doge and everything else, which is the federal government over bloated with staff to the point where it's become a little bit sclerotic, right? Where, you know, I don't know if you've ever been like to a third world country. Like I've done with paperwork in India and stuff once in a while. Thank God I don't have to do that. But literally it's like, oh, this guy needs to sign this paper. Okay. And then you go to that guy and the guy's like, no, you got to sign it. This guy has to sign it. Okay. And then this guy has to sign it. And literally this is for a very simple task. And what happens is, because of the framework that gets put in place to basically have all these checks and balances and everything else, you find that administratively, there's just so much bloat that ends up causing people to not actually do the work that needs to be done, right? So I think sometimes when it comes to the government, that's what happens, right? A lot of people thought, well, you know what, we need to introduce this measure and that measure, and let's hire to basically do this, and let's hire to do that. And eventually, it became too sclerotic to the point where people, got a little bit frustrated. And I think some of what Doge is doing right now is working to reduce that. It just seems that it's coming in the form of a hatchet, which I'm not a fan of, because among the people that they fire, I'm sure that they're going to be losing a lot of gifted and talented individuals that have years and years of experience. Like I underestimated what experience meant when I first started working. I thought, oh, experience, whatever. No, experience doesn't matter nearly as much as emphasis on like enthusiasm. So I thought, I'm a young guy, I'm very enthusiastic, I could do X, Y, and Z. And after working 5, 10 years, and I see the new guys come in and they're super enthusiastic, I'm like, no, you got to learn the ropes, little buddy.
Yeah. No, I agree
it's
with
not
you,
as
dude.
simple as you think. Dealing with people has a certain art to it that you only learn by doing things on the job, and then as time goes on, you learn these things that are not necessarily taught to you in school. And they're not meant to be taught in school because it's an ever evolving change that's happening. So I think what happens is now, especially if I don't have to do any more hiring because I'm not in that role anymore. But if I was to be in a hiring position, I would prefer someone with at least 5 years of experience if I needed someone in a higher role. And if someone was at like ground level, I would say, you know what, are you willing to do like something like an internship and learn for 6 months? After that 6-month probationary period, we can assess whether or not you're actually going to be able to fit into this. So if I had kids, and I don't know if anyone here is in the chat, I would highly recommend while they're in school, apply for internship programs through the schools departments that they have. There are great schools out there. I would say if you're going to college or if your kids are about to go to college, don't focus on the name of the school nearly as much as what kind of connections does that school have to internships around the place. So as an example, I have a friend who went to Pace, right? Pace University is in downtown Manhattan. Now it's not NYU's, business, stern business. It's
Still
not
a good school. Still a good school.
But it's still a good school. But what's really cool is because of their proximity to Wall Street, they have so many internship programs that focus directly on that. And sometimes I'm like, maybe I should have gone to Pace if I wanted to be in business. Luckily, I didn't. I went to Stony Brook. I loved Stony Brook. But the point is, had I gone there, SUNY SB. So had you gone to a school like that, you would have got a lot of those internships. And that internship would have led to a career right out of the gates. Just like a lot of my friends who did go to Pace, right after college, they went to work on Wall Street. And then those same firms ended up paying for their master's degrees, and saying, look, if you want to go and get your master's, we'll pay for it on top of you working in a role here at this company. And did you do any internships when you were at Stony?
No,
I did.
I interned at a local pub house and drank as many beers and ate as many wings as possible. I definitely interned every Tuesday night. 5-cent wings, bro. So no, dude, I didn't. I gotta be honest.
What was it?
I cruised through
Ice
college.
House? What is it? Ice House?
No.
The one right across the trains. The train straight.
Yo, dude. You know that place, Tuesday, 5-cent wing. That's unheard of, dude. 5-cent wings and dollar beers. Woo! Man, that was the place to be. I don't know if you guys know, but it was probably like a year ago when Kris and I were talking. And I grew up on Long Island, and Kris obviously grew up in New York. And we both found out that we went to the same college at the same time. And it was really funny because there's so many terms that you'd need to know in the state school in New York. And it's like out east in Long Island. If you guys know Long Island, it's a Long Island reaching out of in the eastern Atlantic or no western Atlantic, but it's reaching out. And like there's nothing out there in eastern Long Island. So like when you're in school there's really nothing in that area. So the only thing you can really do is stay in your inner community at school. So I'm surprised I haven't seen you, but Kris, no offense or anything, but that school is like mostly Indian people. So like you just blended in with the entire crowd. In fact,
Indians and Chinese. There's a lot of Asians too.
I mean, I blended in as well. People just assumed I was Indian for a while. So, but no, I didn't do anything when I was in college, and there was definitely a lot of opportunity. If I could go back, I wouldn't really do it differently because I wouldn't be here where I am today if I did do it differently. But no, I would definitely recommend that. Internships are so easy to come across because no one does them. Barely people do them, so they're more willing to take on this work. And think about it this way: a company is getting free labor. They don't have to pay anything. They just got to meet the stipulation, maybe give you a recommendation or something, whatever it is. But at the same time, it's like that really, especially if you're in accounting, you have to do internships. Otherwise, when you graduate, there's so much competition on entry level for accounting.
Yeah. I think that's probably like that's game that I could give to anyone. Before you figure out if you want to do a master's and all this shit, dude, do an internship, get a job somewhere, and then follow your master's. I think a master's degree without any relevant experience is probably one of the most useless things, because the minute you go into an interview and they're like, hi, what kind of experiences do you have? If you can't give them the right answers, Like I know right now when I have an interview come in, like before when I was in some management role, when I hired someone, I would just ask them like, hey, I'm having this trouble. How would you fix it? And you could tell in like 30 seconds,
Yeah, you
like
can tell.
this guy knows what he's freaking talking about
Yeah.
versus someone who's like just. And I remember when I first went to my first interview, the guy who hired me, he asked me, he's like, oh, how do you do this? Right. And I had no clue. So what did I do? I just pulled up a book that I had and I started reading verbatim from the fucking book, like instructions on like, cause I was a radiology tech. So I was like reading, this is what I would do. And he's like, wait, so you need to refer to a book? I said, yeah, I don't want to give you the wrong answer. You know, it's like, I don't know it. You're asking me a question that's like, that doesn't exactly like happen all the time. It's a very, very distant thing. He hired me on the spot and that started off my career. But the point is experience helps a lot, you know? So,
yeah, I think nowadays it's kind of expected. Like, if you, would you rather have a Mr. Know-It-All that's book smart, or would you rather have the person that could think in their feet in critical situations? I mean, when it comes to IT, it's like you need someone who can think in their feet when there's like a red alert sign across the board. But with just segueing into the financial markets, I mean, when you see the market down 10% today and this relentless sell-off, I feel like you got to know what you want to buy. Like,
I mean, like a baby. I slept like a baby. I have not been, I'll be honest, I haven't looked at my portfolio in like 4 days. Okay. I've been like, if I don't see it, it didn't happen.
Just take the number you last saw and like divide by 2, and that's probably where you're at right now.
Nah, I told you the good thing is I'm hedged a lot via spreads, and then I also have like my Brookfield preferreds. So I'm about to get a nice little payday at the end of the month, which is nice.
You have lower the beta in portfolio with the preferreds as well, which is basically a dividend paying position. But also, I think my portfolio is somewhat hedged with my exposure to SPY and Qs or the equivalent of them from Vanguard and stuff. But at the same time, it's like, I mean, I'm a growth stock investor, so this is the name of the game, man. And it is what it is. I still remember October 23, same thing as well, right? Like I wasn't a heavy growth investor in 2022, but like I still remember that fall of 2023. People were balls to the wall bowling on July, and then it was down for like 3 months straight until it bottomed. I'm not saying it's going to bottom now. I'm just saying like you cannot be in growth stocks and lever up in growth stocks if you do, and not expect this kind of drawdown unless you're a trader. But if you are a growth investor, even for the long term, like you can't be up every single day, man. Like you just can't be up every single day. Like that's just the name of the game. And if you think that's the game, then you got another thing comes to you, you're not going to survive because there's never green shoots every single day. But I mean, we've seen, we're in a 10% correction on the S&P 500. We had the first official close under a 10% correction territory.
I think NASDAQ is 15.
NASDAQ's 15% down from its all-time highs. But, you know, one thing that we're going to be mindful about is that we were very extended in those all-time highs. So being down 10% is not necessarily a correction in my view, mostly because a lot of things were very frothy. Like, and then even look at like some stuff is like still up there, right? There's a lot of companies out there that are pretty resilient. I'm not saying that they need to be down. I'm just saying that there's still some frothy valuations out there, but like just, you know, in fact, I got to say, like for quite some time, I was like, wow, HIMS is very resilient to this pullback, right? And then last couple of days, HIMS is down like 20, 30%, you know, and it's, I'm not saying it deserves it. I'm just saying like, don't be so naive to think that you're in a good stock that's going to be resilient to all this, because you never know what story is going to come out. If you go back to mid-February, no one would have told you we're at a 10% correction that quickly. Some people could have said there might be a correction or something, or you're going to have a pullback, but like no one expected that it was going to happen at this historical rate, at this speed that it has happened. And pretty much, I'm going to say never happened before, but like this is one of the fastest 10% drawdowns we've had on a major index level in a long time. So I mean,
there's one big difference in the past corrections versus this time, in that the past corrections were sort of market based, where it's not something you could control, where it was just like, oh, you had the fallout by like, let's say the yen carry trade, the fallout from that, right? Like that's data that comes out that shows like negative growth, like into 2021, right, where we had like we had a drawdown in the Mag 7 because of the overstaffing and the profitability going down and everything else. So this time everything is working good, but you got the Trump admin mix that's really screwing things up. But the thing is, it's a controlled demolition. I don't know if you noticed that. And I think what's happening is they're trying, in my opinion, to basically crash things as much as possible so that it destroys consumer confidence and thus destroys inflation, right? Their main objective right now is get inflation down and get it down fast. The reason why they're moving with the speed that they're moving is, I think there's about 3 to 4 reasons why. The first reason is the Joe Biden presidency just ended, so they still have this kind of like this trump card that they can throw out that says, oh, most of this is because of Joe Biden and their reckless policies last year, right? So if you, let's say this happened 2 years from now, there's no way that you could blame Joe Biden. Right now, early on, you can still blame this market downturn on Joe Biden and the Democrats and all that stuff. So from a timing perspective, they're utilizing the blame game right now while it's still relevant. The second reason is because if they did it closer to the midterms, right, or if they did it in a gradual pace, yeah, the market would end up coming down, and it would come down with like, like a nice slow moving downward move. But that in itself would be a problem, because now what ends up happening is your max drawdown will probably end up somewhere in the middle of 2025, like maybe not middle, actually towards the end of 2025, meaning that the upward move would also be in the same kind of like slow upwards trajectory, and thus make it very difficult for the Democrats, for the Republicans to during the midterms. So what their thing is, let's crater the market right now. Let's crater inflation. And then in the second half of the year, come in strong with rate cuts from Powell, because right now everyone is kind of like just literally going crazy. All the tariffs that they're doing right now and all the tariff threats, in my opinion, are pretty much just superficial. I don't think a single tariff has actually like gone into full implementation, and they're getting pushed back so many. And if there are that are getting through, they're not necessarily having the greatest impact on us. The thing that's happening is the equity markets are definitely not a fan of this, and they're crashing every day, which totally understand. But I think that's a setup for a strong recovery next year, and possibly the third and fourth quarter of this year. And that's the way I'm kind of like looking at this and positioning myself, where right now I'm stacking as much cash as I can on the sides, so that when the bottom is finally in, and I think I know the trigger for the bottom in, actually, it's when Powell starts the rate cuts. I think that is where we will see this little bit of a period of a gradual, like, oh, you know what, the rate cuts are here. But then what happens is, as CPI keeps coming down, the markets are going to say, well, give me another rate cut and another rate cut and another rate cut. And by the end of 2026, we should see almost 8 rate cuts. And if we get to 8 rate cuts, the deficit goes from 1.1 trillion to 500 billion, which is a huge move down. Let me rephrase. The deficit right now is 2 trillion, but the interest on the debt is about 1.1 trillion. Let me actually bring up the chart so people can see. And once you see it, it's like, holy crap, this is kind of nuts. Here it is. So, okay. Can you guys see my screen? Hello? Can you see my?
No, I can see your screen. Yeah.
Okay. So this is from October of 24. Okay. The last fiscal year. Look at this sharp rise that we had literally from 2020, 2021, 22, 23. And this is 24. This giant move upwards is what's causing our budget deficit to freaking be massive. And right now this says 8.81, but it's actually closer to like 1.1 trillion. That's how much we're putting up in interest. So in order to shrink this thing, you're going to need interest rates to come down to maybe like 2% or less, and especially on the front end of the curve. So right now, I think we're maxed out Let me just share right here. 1 second. Man, I really need to stop joining with this stupid what is it called? With Edge, because like, hold on.
Microsoft Edge?
Yeah, I gotta change my wife. Like my wife signed in to her company's thing. I keep forgetting
Oh
to
yeah,
change the default. So
yeah, you get, but you're a Chrome guy, right?
I'm a Chrome guy, bro. I love Chrome. I
You
hate.
better be a
I
Chrome
hate
guy.
Bing.
Sundar Pichai, he's not a Chrome guy.
Yeah. So check a look at this. So right here, you can see that even with the market moving down over the last month, you're seeing that the 10-year, especially in the last 2 weeks, has actually been holding up to about 4.2. And it's not going any lower. It's literally been bouncing off the fours right now and staying in the low fours. I think the market has basically said you're not going to get any lower than this unless Powell commits to starting to lower rates. So if you look at like last year when Powell started cutting rates in June, look at what the 10-year did. It dropped all the way down to 3.62 in September. So this right here is what we need. We need the 10-year to go from something like this right here to something like this. And this is only going to happen if interest rates, if inflation starts to come down. And you can actually layer on CPI and see exactly that chart. 1 second.
You know when that's going to happen?
When?
That is going to happen on March 19.
When what? What's coming out in March?
Is that FOMC? Is it next week FOMC?
Yeah, well, the thing is SEP, when SEP comes out.
That's what I'm saying. When that SEP summary of economic projections, in case you guys don't know, the Fed comes out with a summary of economic projections about every other every other FOMC day, every other FOMC meeting, which is basically laying out their projections 2 years out in terms of where their target Fed funds rate is, and pretty much gives the playbook on how they're going to do it and how soon they're going to do it and where their estimates in terms of economic data falls in. You saw the last one, right? They've been bringing those rate cuts less and less and less ever since the last what was it? Was it September or was it December?
I think it was December.
Yeah, okay. So December they had it, and it's been edging up, less and less and less cuts. And they even, in fact, expected inflation to stay sticky for quite some time. We saw what happened with the CPI reports. They're actually coming in below expectations or slightly below expectations, and it's going to get worse. CPI is going to continue disinflating, right? Yeah. The Fed, when that SEP comes in, I bet you they're going to have more rate cuts on there than they had in the last one. I don't know how many more, but I bet you they're going to be a bit more dovish. And in that aspect, I'm looking at the CME Fed tool. So let me go ahead and share this screen.
Yeah.
So this is the CME Fed tool. This is basically the probabilities of rate cuts. So now the market is actually pricing out rate cuts from a few days ago, and it's likely because of the CPI report. But we got an 80% chance that we're going to stay flat, or that there's going to be a pause in this meeting coming up next week and the May meeting. If we scroll down here to the probabilities that were a week ago, there was actually an almost 50% chance that we're going to get one rate cut in May. Now it's basically an 80% chance we're not going to get a rate cut. If you go to the end of the year, this is the amount of cuts that we're going to get by the end of the year. Now there is about a 35% chance we're going to get 3 rate cuts by the end of the year. There is a 32% chance we're going to get 2 rate cuts. But a week ago, there was actually it was probably around this area, but there was a 25% chance we're going to get 4 rate cuts, right? So, but look at a month ago. Like the market was basically saying we're only getting 1 or 2 rate cuts. So we're really coming out of a higher for longer state that the market has believed we've been in, because the Fed actually did. Powell came on the mic last Friday and he said that we're just going to hold on, but tariffs are creating a bit of uncertainty. So that's why we're going to wait and see what happens, right? And by all means, Trump has not actually imposed significant tariffs on Mexico, Canada. He has in China, but I mean, he's always imposing tariffs there, but he's been rolling back or softening the blow of the tariffs by excluding certain sectors or goods in the tariffs charged to Mexico and Canada. So when you look at it from that aspect, he can keep talking and stuff, but when that summary of economic projections comes up and they put in more rates, like you got to keep an eye on the CME Fed funds futures. By Wednesday after close, this number is going to change and it'll probably closer to 4 rate cuts by this year. And you know what, to be honest, we're probably going to get 4 rate cuts or more by this year.
Yeah.
If this data continues to draw down, which we've been talking about the housing data for quite some time, that's going to pull inflation down. Go ahead.
Yeah. Check this out. So this was from the summary of economic projections in December. So according to their projections, about 10 members thought that the end of the midpoint target for the end of 2025 was going to be 3.87. And this is on the federal funds rate, right? Which means that if you think about it, usually the 10-year trades about 1% to 1.5% to sometimes even 2% above the federal funds rate. On average, usually about 1.5, I would say, is a good number, or maybe even, it'll fluctuate based on like future projections. But I think 1.5 is a good amount. So if you think about it, 3.8 would end up giving you about 4.8 on the 10-year, but the 10-year is already saying we need cuts, and we think it's actually going to be more cuts.
Yeah.
Right. So more than likely, what we're going to see is this number right here, where majority of the people are thinking, that the base rate, the target rate should be 3.8587. It'll actually move down to about 3.3, maybe even the low threes. Right.
I think if the
numbers. Well, if the numbers are bad enough, then it'll be in the 3 range. And I think that's the key, right? So when the summary of economic projections comes out, that's when we'll know. I mean, the Atlanta Fed and the GDP now is already telling you that, right? And then the other thing to also take a look at is the Fed, what is that thing called? Nowcast on inflation, right?
They updated it though. Or the head of the Atlanta Fed or someone from Atlanta Fed released a note. There you go. That note that was just on there. You got to share your screen.
Yeah, let me. No, not. I'm trying to get the other one. Hold on. God damn it, man! This is why I freaking hate Bing. What the hell? Why am I?
I don't know. Why are you using Edge? Like
because I clicked on because I clicked on the link that you sent me on WhatsApp, and it automatically loaded Edge.
That's your default browser. What's wrong with you?
Because my wife changed the default browser to Edge. So I gotta change it back. I know. I need to leave.
Did she hear that? I hope she didn't hear that.
No, I need to have a conversation with her later. Be like, stop changing my default browser to Edge. Hold on. Fed now cast inflation. Like, there you go. See, it's like literally the first thing that comes up when you search on Google. Yeah. When you search on Google, it's like the first thing that comes up. And when you search on anything else, like Bing, it doesn't even give you the right thing. Okay. So here we go. You seeing this right here? According to them.
Oh, sorry. Okay, go ahead.
According to the Fed, right? Look at this right here. CPI in March is about 2.46. Core PCE is going to be down to 2.47, and PCE is going to be at 2. Okay. It's a huge move down from February. Look at this.
What is PCE?
PCE is like, damn, I forgot. I have to look up the reference again. But the point is,
I know what it is. I'm saying, when is it?
Let me look at trading economics and I'll tell you. Give me one.
I'll bring it up right now. Hold up. They're going to have it on what? Oh my goodness.
What?
No, it's not telling me what it is. Hold on.
Okay, so
okay, they're gonna have it on March 28th.
Yeah, core PCE is going to be in March 28th, and right now the forecast is 0.4% month over month. So, if it comes down lower than that, man, we're going to be in a good place. So,
actually, just like the amount of drawdown that the market's been having, like just nonstop slaughterhouse red days, like every pot being sold off like ferociously, and people getting excited about every single like 0.1% swing on like in the upper direction, thinking that this is the bottom. Every single time, like I think about this, it's like, man, this is going to set up for a one nasty short squeeze for everyone to get caught off sides. We just need a catalyst, and we have not gotten that catalyst. I mean, VIX Crush Fridays is coming up tomorrow, so we'll see what happens with that. But dude, we got this meeting coming up, and I wonder what's going to happen next week, because if the market is still like lower lows by Wednesday, there's a pretty good chance that there might be a massive short covering just by any word that comes out of his mouth. Like, that's gonna be a very volatile day. If we're still at VIX mid-20s by Wednesday, it's gonna be a very volatile day, dude. Like, I'm not gonna trade that, but I'm just gonna look at it and be like, man, this is crazy.
Yeah. I mean, trying to find this one thing I saw from Lisanne Saunders. I think this was actually really important. And I got to switch because it's not on freaking. I'm on Bing, so I got.
You're not learning a lesson, man. Just sell those spreads, man. Just sell those spreads. This is ridiculous now.
Okay, here we go. So look at this right here. So Lisanne Saunders posted this today. It's very interesting this morning. So owner's equivalent rent has probably been one of the main components that's been sticky and hasn't been moving down fast enough, but it's literally down to 3.68 on an annualized basis now. So this is like historical trend mode. Like, look at this. Like, literally, this was the trend from 2015 to 2019. So if this actually keeps going down and it actually goes to about 2% and below, dude, by the end of this year, we could see inflation down to like twos, like not twos. I'm saying like two itself, So yeah, I think at this point we're in a good place for a strong recovery, but it's going to be a while. And I think the Trump administration, they've got enough cojones to not give a shit about the market and just say, you know what, we don't care, and we're just going to do what we need to. Now, what does this mean for us? It means that opportunities to buy things are becoming more and more clear. I mean, you're able to buy Google on a forward 18 basis, like, which is in my opinion kind of nuts. But here's the best thing: the 2027 contracts, like end of 2027 contracts. December is out. Now the thing is, I want Google to keep going down as much as possible so I can buy those as cheap as possible. You know what I mean? And then I'll sell the short leg against it. But right now, if you look at forward earnings estimate, not for 2027, but for not for 2026, but for 2027, Google is like, what, like third? I think it's actually more like 13 PE on like a 2-year forward basis, So and by that time, Waymo, I think, is going to be a big thing. And I think our earnings are going to probably be revised even higher. So I think as a long-term investor, I am going to buy them, but I'm not going to buy them right this second. I'm going to wait until the market finally starts to like bottom out a little bit, and then after that, it's all me, baby.
Yeah, that's actually very interesting you're talking about that. I mean, there's been some stocks that are in a relentless downfall right now along with the market, but let me actually share this right now, because these charts are starting to pop up on Twitter now. And that's when I'm just like, all right, people are getting super bearish now. You're starting to see these charts come up where it's just like, okay, you're going to compare this to COVID. Don't get me wrong. I like the Ritholtz. I like the compound team. This is from Ben Carlson, or maybe you got someone to put it up for him. I'm not saying they're getting bearish. Like, they take a very holistic approach. Like, they're not necessarily trying to time the market or spread FUD or anything, but, just an interesting comparison is that, you start to compare the drawdown we already had to this potential drawdown. So something like this, though, there has to be a black swan. Like, there has to be something to have this catastrophic fall at a faster pace than we already had for something like this. 2020, obviously, that was COVID. 2018, when the bottom basically fell off in December, that was the taper tantrum. That was the taper tantrum, not the taper tantrum. That was basically when the Fed was trying to hike rates into a stagflationary market, and the market basically went 20% down in December of 2018, and the Powell had the famous Powell pivot where he said that he had an emergency meeting. They said they're not going to cut rates anymore, and the market basically bottomed. A credit event might happen. That was 2008 with the credit event and mortgage, real estate mortgage crisis and stuff. But for that to happen, there has to be a black swan. I'm not saying that it can't happen. I'm just saying that the probability of that happening without some sort of black swan is pretty low. But I mean, that's the whole point of the stock market, right? We are literally taking risk every single day of a black swan happening. Like you can't. 2 or 3 months ago, everyone thought the stock market would keep going up. Fast forward today, no one ever thought it was going to be down this quickly. And if a black swan happens, like I'm not going to be sitting here and be like, that can't happen. It could happen. Right.
Yeah.
Like just the way that I'm timing my buys is like, I'm not going to sit here and like say like nothing's going to happen. We're going to be fine. It's like, dude, Russia could say that Russia could say that they're going to sign this peace treaty, which I don't know where that stands, to be honest. I think that's just noise and whatever happens. But they could just go ahead and just attack Kiev tomorrow. That might start something, or Taiwan could be invaded by China. Who knows what could happen? I'm saying like, this is the risk we are taking in the stock market. And I feel like if you don't have that understanding, then you might not make it, because not everything goes up every single day. This isn't going to be 2023, 2024, where it goes up almost every single day, month over month. Like we need this. We need this in the stock market in order to continue going up in the longer term. Like it can't go up every single day because those valuations are crazy. Right now, actually, I think we're at like a 19 forward PE and S&P 500, which is considerably cheaper than we were a few weeks ago, and probably lower now because this data is actually pretty old. But I mean, we'll see what happens, man. I mean, as far as the deals that are coming up, there have been some pretty extraordinary deals when it comes to positions in high conviction in my portfolio that I have been buying. Amazon, I wouldn't say is the best deal right now. I mean, it is cheaper than it was when it was at 240, but I wouldn't say it's a screaming buy in my opinion. Google, I think out of the Mag 7, Google is probably the best value right now. Nvidia is staying strong though.
Yeah. I think this is something to also watch out for, which is look at the categories of inflation that basically have been driving us higher, right? So number one is motor vehicle insurance. Like literally people bought all these cars during the pandemic with stimulus money. That basically juiced up the price of the cars, but then insurance, which is more regulated, it eventually caught up. But what ends up happening is insurance does not grow at the same pace. Like this is 11% year over year. Next year, that 11% is probably going to be closer to like 2 or 3%, right? Or even lower. So if it gets back to its normal trading ranges, that'll be fine. Next one is meat, poultry, fish, and eggs. You can see the price of eggs starting to come down significantly. One of the reasons why poultry would eat so much goddamn chicken is because of the bird flu thing. So that also should be coming down pretty steadily. Tobacco and smoking products, I have no clue. I really don't care. It's probably not something that matters that much anyway. It's probably a very small amount in the general sense of CPI. Natural gas right now is going a little bit higher, primarily because you've got all this spending on additional data centers, but then you also have a lot of that nat gas being shipped overseas to Europe. So if the Europeans right now, they're looking at, probably tampering down their nat gas usage next year. And when that happens, nat gas should sort of come down. It's not going to be like you're not going to see the two handle on Henry Hub, probably around 3. So nat gas prices, if they come down, that'll be good. Motor vehicle maintenance and insurance, you can already see so many people are behind on their auto delinquency and everything else. This is also another thing that should be coming down as more cars get repossessed and everything else, and there's more inventory out there. So I think motor vehicle maintenance eventually should also come down as well. Owner's equivalent rent, we just looked at, that's going to be coming down because there's just so many homes for rent. And right now, the immigration population, like the illegal immigration population, which was growing at about 2 to 3 million per year, they're no longer coming in anymore. And a lot of people are leaving. And there's still houses that are being built right now. So I think even owner's equivalent rent is going to come down. So if you look at the vacancy rates on homes are starting to come up. If people here in the chat are in Florida, in Texas, in California, in Tennessee, you're starting to actually see negative rent. I don't know if you saw that. Like, there's been a lot of talk about that.
The landlords are paying you to stay there.
No. So basically,
I know owner equivalent rent. I hear what you mean.
What's happening is a lot of these new constructions that basically come up, they'll be like, "Oh, we'll give you 3 months of free rent," right?
Yeah,
they'll charge you $2,500 for rent, but if the first 3 months are for free, that means that
Exactly.
technically you're only paying like 2,000 something,
Yeah.
as opposed to that full amount. So right now, the amount of vacancies are starting to go up significantly, right? Food away from home. I think people, as their wealth effect comes down, people are naturally just going to say, you know what? I mean, we always joke about this. When the market is up, you're always like, hey, it's time to go to McDonald's, right? And get like a meal. I think generally, if the market is down and people are not feeling that great about the economy, maybe they don't eat out as much. Maybe they start eating, ramen and peanut butter jelly sandwiches
I-
at home like I've been doing.
Dude, I'll tell you something, man. When the market's
Yeah.
pulling back this much, I get
Mhm.
very cheap. I get very frugal. We don't
Me
eat out
too.
right now. We don't do it. I'm trying to save every penny right now because I'm going to throw
Yeah.
this at the stock market if we go down. I'm prepared. Like I'm not going to be surprised if we go down to a bear market. If we do, okay, like I'm going to be DCAing hard into the stock market. I'm going to be like, hey, we're not eating today, guys. No one's eating today. And the kids, they're not going to school this year. We're going to stay at home, put our money in Amazon. All right. No, but in all seriousness, though, I wanted to kind of segue because I got a hard stop in a few minutes, in 10 minutes. But I want to get a little bit in cybersecurity. Yeah, that's right. That's right, boy. That's right. We definitely have to make some time to get into cybersecurity, man. Remember what I've been telling you?
Let me just say something really funny. The other day, my wife went shopping to Kroger. And let me tell you, what really, like, it didn't make me mad, but it kind of like made me like, damn, I wish she hadn't done that. So my wife got organic bananas, and I'm just like, what an idiot. Like, there's no such thing as organic bananas. Like, come on, girl.
Well, they're only like 20 cents more.
It doesn't matter. That's 20 cents that we didn't have to pay. So I'm like, this dumb bitch is buying organic. Like, she doesn't know that we got a recession coming. Like, I gotta talk to her about this, Whereas literally like 2 months ago, she was like, hey babe, like maybe I'll make this at home. I was like, nah, babe, it's all good. Let's go out. Let's have like a $50 Thai meal. And now I'm like, this dumb bitch.
Yeah, dude. Honestly, I was looking at Model X's probably like a month ago, and then I just completely I'm not even bothering anymore. Like I'm like, I'm just gonna keep driving my car. My car's good.
Yeah. Bro, I
gonna pull the trigger on that. Yeah,
I stopped hunting. Like I realized that I don't need to buy a house this year. Like somehow it just came to me the other day, and I was like, maybe I'll just chill here. And I was talking to the wife. I said, hey, listen, the price of homes are coming down. Let's just chill. I'm trying to convince her because I got his money set up on the side for a down payment. I'm like, man, I'm trying to buy the dip. And if I buy a house, I'm not going to be able to buy the dip. So I'm like, I got to convince her somehow. I got to like, what's the word? Like project. We don't need to buy a house right now into her brain,
dude.
And it's working.
When you told me that like you had like a mad look on your wife or something, this is exactly what I pictured, man. Like you remember that episode of the Chappelle Show when Charlie Murphy made fun of Prince for his outfit and Prince had this look, man, dude. Chappelle Show is such a classic. All right, so want to get into this company right here. I'm going to go ahead and share my screen. All right, so we got this bad boy right here. I've been talking about Rubrik since like these levels, right? And I had a pretty big position, and when it went all the way up here, I trimmed a little bit. I didn't trim a lot. Probably should trim more, but you know what? To be honest, I am a big fan of this company. They had earnings today. They're actually up like 20% after hours. And I wanted to go over a little bit first on cybersecurity, right? So in general, everyone knows what CrowdStrike is. Everyone knows what Micro Defender is. Some people know what SentinelOne is and so on. And then everyone knows what Palo Alto is and Zscaler and like all the network security stuff. So you got your endpoint security management, which is for your clients, mobile devices, cell phones, whatever it is. And then you have your network security, which is like Zscaler, Palo Alto, which is protecting the perimeter, right? And then you also have backups or data security backups, which is like where Cohesity is and where Rubrik is and so on. But Rubrik is like the leader of this entire sector, right? And they're fairly new. They've been around for about 10 years now. I think it's about 2013. The CEO and a lot of management is from Oracle, actually. But the interesting thing is that the former chair of Microsoft is actually on the board of this company, and this company is backed by Microsoft. I think Microsoft owns they had a $500 million investment in this company years ago. So they probably, I think, own like 10% or something more of the company. So this is kind of similar of like an Uber Grab situation. But in terms of this case, Microsoft never actually had a backup security product, but they've invested in Rubrik to kind of be that tailwind for them. So the company reported earnings today. And like I said, they're up about 20% after hours. But I wanted to bring up some of their earnings metrics here. So actually, no, that's not the screen that I want to share. This is the one. All right. So this is from someone who I follow, Hardik Shai, and I didn't actually get to drill down the earnings today, but just more of the high level stuff. Like their total. This company is actually a pretty small company. It was a $9 billion market cap, and 20% move is not that big. What do you think in terms of a mega cap? But considering that. The estimates for this quarter were actually, it was like 233 million. They came in 10% above that at 258 in this environment, in this contracting IT spend environment, which we've seen on many cybersecurity companies left and right. SentinelOne said it, Crowdstrike said it. They expect like a slower restricted IT spend. Rubrik came in 10% above that. On top of that, this EPS is actually adjusted. It's not necessarily GAAP, but still like this type of beat as far as expectation goes. This kind of explains why it's up 20% after hours. The guidance actually was not 861 million for next year. It was actually around 1 billion, 1.1 billion. So they beat it by like about 5%, right? And then look at their EPS beat. But the big thing that does matter though is their subscription revenue. So subscription revenue is basically the revenue they get as far as licensing goes for installing each one of these clients, basically the amount of seats that a company's owns to install in their servers and so on. And that grew 54% year over year. The guidance for subscription annual recurring revenue, which is the actual annual contracted revenue for each of their clients aggregated for all across clients, it's 1.35 billion for next year. This is just coming from a 1 billion ARR this year, right? So they're expected to grow that by 35%. And at this magnitude, dude, it is a $9 billion company. Remember when I told you back, I think it was like a couple of quarters ago when they were trading around $30.
Yeah.
And their ended their fiscal year 2025, which has just ended today, or ended January. I think ended January. They were basically trading for, I think, like less than 6 times ARR if you took out the cash on their balance sheet, right? So today they're trading near that similar valuation before close. So tomorrow they're going to open around $11-12 billion market cap. So that would be inflated, obviously. But for me, this is probably going to be a $40 billion company maybe in a few years. And I'm not saying that because I'm an extreme bull in it. I'm saying because of the fact that cybersecurity is a massively quickly growing TAM across the board for all of these cybersecurity companies. But on top of that, this is data backup security. So a lot of companies have had major cybersecurity breaches lately, and their data has been kept at ransom, which is why they call it ransomware. Basically, a hacker comes into your system, they get a hold of the admin password for your database or something, and they encrypt the entire database with a key, and they hold the key to decrypt it. And they basically say, you need to pay me millions of dollars and I'll give you the decryption key so you can have access to that data again. A company, when that happens to them, they can't do anything. There's actually a large healthcare company that happened to probably like a year ago, I think, and they had to pay the ransom. It was like $23 million. But had they used Rubrik, or had they have some sort of product where it was scanning their backups, they could have brought up their systems in less than an hour and not paid a ransom. Or they could have brought it up to maybe data from a day ago, but be able to recover from that. But they were completely offline for a long time, so they had to pay that ransom. Rubrik answers that question as far as cybersecurity resiliency goes.
Yeah.
And besides Cohesity, they really have no competition in this sector. So if I share this screen over here, this is the Gartner Magic Quadrant, which is basically a research and analyst firm that, they have magic quadrants for basically the leaders and the best people in the industry. If you look over here, Rubrik's like the top one in terms of leaders. Basically you want to have the ability to execute as well as the completed vision. And Rubrik is all the way here to the top right. And then you have Commvault, which is like a very legacy solution. So they're not like native to this entire cloud backup and data security sector. So they have to innovate to catch up with Rubrik. Same with Veeam. Veeam was mostly for VMs and on-prem cloud infrastructure. So not necessarily cloud infrastructure hosted by the cloud, but like VMs hosted on like Citrix servers that hosted in their local data center, on-prem data center. And then you got Cohesity, which is actually a pretty good company as well. But I don't know if they're publicly traded, but if they are, they probably, I actually need to look at that to see if they're publicly traded. But that company is also really, I'm not gonna discount that. Cohesity is competition into this, but the TAM is growing pretty quickly. Veritas, Legacy Solution, Dell. I mean, these are all companies where it's like they need to catch up, right? But when you think of Rubrik, man, not only are the metrics good, not only in the cybersecurity TAM, but on top of that, like just the management that's on their staff, in addition to the platform that they're working on right now, Rubrik Security Cloud is a cloud native platform versus Polaris, which was like their old on-prem platform. So they're just adding it and constantly releasing updates. So they're able to push out these updates very quickly with minimal downtime for a lot of people. But on top of that, it's data security and backup. So like downtime isn't really significant unless something actually goes out. So, I mean, I just want to go over that one. Phenomenal quarter. Just because of the fact that we're already at the hour, I don't want to kick this into the ground any longer. But I mean, if there was really one sector that I had to like really be bullish on as far as like confidence that this is going to continue to be a fast growing sector, it'll be cybersecurity, because we've heard about all the benefits of AI, how it's going to help us, how LLM is going to help us and everything. I don't know if you ever saw the show 0 Day. It's actually on Netflix. Just came out recently. Robert De Niro.
No, I haven't heard.
Okay, so 0 Day, it takes place in a modern, like around our time. And basically the entire country has a massive cyber attack that literally takes down everything, all the systems, electronic grid, everything within minutes away from each other across the entire country. And when they're explaining how they're able to penetrate it, basically you had malware that was sent around. And then on top of that, it was able to use AI to figure out how to penetrate systems that it never came across before. So like iOS and Android, right? You can't give the same virus for both of those phones because it's a different operating system. But the malware utilized AI to be able to reconfigure itself to be able to attack that system in lightning speed, right? So I mean, it's a fiction show, right? Obviously, it didn't happen, but this has not even become the narrative when it comes to cybersecurity. And when that does, and even in CrowdStrike's earning call with George Kurtz, the CEO, he was going into length talking about this, especially when it came to China. He considers China as an enemy when it comes to cybersecurity, and they do try to hack us all the time, right? Like the market hasn't even discussed that in terms of narrative. And when that happens, when that becomes a big topic, these names depends on the market. The market's still falling back, it'll still pull back. But like as far as like the most upside, I feel like cybersecurity is probably up there. And there's some pretty Robert De Niro. Nice. I see what you did there. Nice. But yeah, dude, I don't want to kick a dead horse on this one, but it was a phenomenal quarter. I'll probably release an article about that maybe tonight or tomorrow. But yeah, man, good
Sounds
stuff.
good, man.
Stuff. Yep.
So I think we just have to basically buckle up and just survive for the next however long we have to survive, and basically just build out some cash, not buy a house. Hopefully my wife agrees and we could just take that excess cash and put it towards our favorite names. For me, it's still the cruise lines. I have a venture global position, which I think is severely undervalued. I think that that's going to be a discussion I'll have with Matt on Cash Flow Chronicles, because I'm seeing certain things. Meeting. I'm doing the math. Not emergency meeting.
Emergency meeting.
Yeah, I gotta. It's one of those things where you have to look at the capital structure to figure out like what the management is going to do. So right now, as far as I can tell, there's a really big opportunity for them in the short to medium term to start a very, very strict, like very, very value accretive buyback program. And at the same time, they've got some key developments around the world that are causing volatility. Like today, the Russians are basically saying, well, we'll do a ceasefire, but we also want to transport natural gas into Europe long term. And the Europeans are like, you motherfucker. Like, so the question is Trump going to allow that? And I don't think that the Europeans are cool with Russian gas anymore. I think they realize that long term funding the Russian war machine is detrimental to all of their futures. Now, they don't want to become dependent on the US for their natural gas. Right now, about 40% of their natural gas comes from the US. They don't want to become 80, 90% coming from the US, because then the US basically becomes your daddy. And I think the Europeans are realizing, I don't want the US to be my daddy. I don't want anyone to be my daddy. So getting long-term contracts signed is going to be a challenge. But I think that's why the Trump administration right now is starting to push against the European Union and saying, look, I need you to lower this trade deficit. And the one key thing that the Europeans need from the US, it's not alcohol. The Europeans have their own alcohol. It's natural gas. It secures them in the future. There's really not much else that the US produces that the Europeans want. Like cars, Europeans have narrow roads. They're not going to buy freaking Fords. Like, it doesn't make sense for them to buy like these big gas guzzling American made cars, So I don't think there's much of an appetite for American cars in Europe. The other major export that we have is, of course, food, food like agricultural products. But even that, the Europeans are, a little bit more stringent about the quality of like food that they get. And the US uses a lot of like steroids and like GMO and all this other stuff in their food. And so the Europeans are like, look, we don't want a lot of that coming in also. So it's like there isn't much that the Europeans depend on the US for, with the exception of oil and natural gas. I think that is going to, so basically, if you want to play the Trump trade, I think natural gas and oil is where we need to look, and not so much on oil, because oil can kind of be coming from some other places, but natural gas, there's only really 3 main producers of natural gas in the world: Qatar, Australia, and the US. And of course, the Russians, but you can't buy from the Russians because they're literally like your enemies now. So that wouldn't work. Australia, the cost is too much to get it. Like, if you look at their lifting costs for that, I was like,
the shipping cost is pretty expensive.
Well,
like
not just shipping, but their own break-even costs are like in the $10 to $12 just to basically produce this thing. So Australia, not to mention, has markets in Japan and Korea, which, like I said, I'll go through all of this on Cash Flow Chronicles with Matt. So between the Qataris and the US, that's really the only two major natural gas producers in the region. And so if the Europeans are serious about weaning themselves off of Russian oil and natural gas, that's going to bring them closer to us. But that means that Trump has to goddamn negotiate and then basically get the Europeans.
Well,
this is one of the things I hate, man.
Welcome to the correction, man. Nothing's working right now unless you're in staples, utilities, or healthcare. I think is doing pretty good right now. Like, if you bought AbbVie, you're doing really good right now. But you look at Dollar General, like the most bearish sentiment you could possibly have in terms of their company, as far as people only buying
shit. My wife's calling me out. My wife's calling me out. She's like, organic bananas taste better. I'll deal with you later. I didn't change the default browser. That's all you, fool. I'm a few minutes behind on the stream.
What? He's on here?
Yeah. She's on here. Yeah. She's
all right. Well, let's leave that. Let's see that for a watch. But anyways, man, I gotta head out now. Yeah. It's great talking. Appreciate you guys for being on here. Again, if you really enjoy the show, especially if you're on Twitter, really happy you guys are on here. Please check out our YouTube channel. That's where you can find additional videos that are not live. Go ahead and like and subscribe to the channel, guys. Definitely turn on the notification bell. Obviously, turn on the notification bell, but have some more content on there, especially with cybersecurity. I talk to lengths about that stuff. Hope you guys enjoy the show. Take care, guys.
Later. Have a good one.